Hello everyone, welcome to another weekly market review. It's the 12th of October 2020. We had a great week last week. Everything that we were looking for was on point, and the move that we've been waiting for has manifested. So let's see if any of you missed it, where it is that you can get in. So we start with the total market cap chart. Let's look at the weekly quickly. So on the weekly, you can see we had a pretty nice week. We have broken whatever weekly consolidation we were building. Price closed well above the monthly open, and basically price closed right below the range POC for the August consolidation that we had. So we closed right below the range POC on the weekly. Let's look at it on the 4-hour. So on the 4-hour, basically this was the key resistance band, the anchored VWAP resistance band, along with the H4 level. So we not only did we close above it, we tested it as support. It was a great point to compound longs to the upside, and we made another impulse. So I'm just going to. So essentially, this is what we did. We built this orange scribble. We got above the VWAP, retested it as support, and we made the move up all the way till the range POC. So I'm just going to quickly hide these scribbles so it gets a bit neater and you can see. So what else we have is this quite clean double bottom structure that we tested, broke out. There is a potential to come down and retest this, because this entire zone of resistance should now very well act as support. But what we've done is we've built this double bottom structure, which we have broken out of. The technical target for this double bottom is quite close to the 380 monthly level, very close to the highs up here. Very clean levels on the total market cap chart. You can see that we were consolidating right below the October monthly open. As soon as we did end up breaking up above it, we had this very clean support resistance flip. You can see this was support. We broke down, tested it as resistance, broke back down to the quarterly level, came back above, slight fake out, but essentially created this as a resistance zone, and now what we've done is broken up above it. So the most ideal scenario, in case you are not already into the market, would be a retest of this zone, this support zone right here. And I would say that a bearish scenario would be losing this monthly open on a closing basis. I think that's something that the bulls don't want to see. But what ideally we would want to see, let me just pull out a fib as well, possibly a 0.5 of this impulse that we've had. So ideally we want to see the 382, the zone between the 382 and the 0.5 holding. It's this VWAP resistance band is very significant, and it should be turning into support if price is tested. But otherwise, I would say the good places to manage risk were all down here below. This would give a great place to compound longs and a good long entry. Apart from that, if we do end up starting to break above the range point of control, we can look at this 4-hour level, which you can see has again been very significant. It was resistant, we flipped it into support, but we failed it again, tested it as resistance. Each time we have broken and we have retested it as resistance. It's a very significant level again. But you can see on the total market cap, there's very clean levels. So we play this level to level, great long entry if we drop back into this resistance band. Otherwise we carry on above the range POC to first the 4-hour level, and then eventually the monthly level up here. what what we want to see on a higher time frame. Let's go to the weekly. On a higher time frame, what we want to see is for price to test at least this 430. I think on this move up, if we can test 430 and flip this 381 level into support, this is when we would really be opening up price for very significant moves, because if you can see on the total market cap chart, we have not held such a high level as support, all the way since the actual breakdown we had in January 18. That was the only time that price was holding support at such a high level. Again in Feb we did hold it very briefly, and again April was just for a week we held this level. So price has been holding this level as a major resistance. You can see June 2019 very strong reaction, and this time in August this reaction is not so strong because the quarterly level has given us support and we are again moving back up to this 381 level. So what I would say is that if the next move is to manifest the way we are projecting it, then we should expect price to come to this major weekly level. You can see how significant this 430 weekly level is. We've had 4 consecutive weeks where price was absolutely unable to close above here, and the next retest we got a very strong reaction. You can see how strong the reaction from this 430 level was. It was what made the lows for this entire crash. So this is a very significant level. The most ideal scenario for me would be over the next 2 to 3 weeks we are able to get this 430 level and then flip 381 into support. That's when we should be looking for the next big impulse which takes BTC above a very very significant level. And in terms of technical target, if we just look at it in terms of the closing basis, you can see that we've already broken out of this base, which is a diagonal base. And also what we've done is we have broken out and retested this horizontal base. So the horizontal base that we have broken out of has already given us a technical target, which is taking us close to this big 2018 yearly open level. So we already have a very clean technical target, because you can see this horizontal base from once we broke down this July 2019 level. Here we have this horizontal base we broke up, retested it, and you can see that we have had on 3 different weeks we've had this quarterly level tested. So this is so clean, technically it's much cleaner than Bitcoin, and it is giving us a very clean target which is significantly higher, which I would say is very close to the 2018 yearly open target. In terms of time, I would say it's early next year or late into the end of this year when we should be expecting this. But for now, I would say this 381 is still the most significant level. But considering this breakout and retest and the kind of reactions we are getting, I would say that we are going to end up breaking it and get a reaction at this 430 level, and after that we should be expecting this weekly block right here to hold as support, and then we can expect this further continuation. But I would say that the cryptocurrency market, it is still under that consolidation phase, and we haven't gotten extremely impulsive yet, by meaning the initial consolidation stage. I would say that we are in this phase right here, so we've had this initial impulse from the March lows. We had the initial impulse, we made a consolidation, and we built another breakout, made another consolidation. Second consolidation, we had a breakout, and then this is a more bullish consolidation for the impulse. So I would say that we are in this second consolidation phase right here, after which we do end up breaking out and make that more bullish consolidation phase into the end of 2020 and 2021. We really build that strong impulse which takes us into we build that strong impulse which takes us into the very impulsive and bullish territory for Bitcoin. So for the total market cap, we are looking at it level for level, and currently if you are not already in a long, which I think if you have been watching our reviews, is not very prudent to not have been able to find a position in any of these impulses, but still it can happen. It's not a problem. If you are not, I would say that this is a great place to manage risk. Other than that, if price is too bullish, maybe we only get a sweep of these lows. But what you can do is then go down to essentially something like the 1 hour and wait for a sweep of the lows and allow price to come back into this 350 347 348 zone, and then you can be longing with the managing risk from that level. So currently these would be the couple of ideal scenarios for the upside on the total market cap chart, and for the bearish we need to lose this monthly open. So the altcoin market cap chart on a weekly closing basis, you can see it's very clean resistance on the weekly, which is right here. You can see we didn't have any weekly closes above here, and last week we have closed above, suggesting that there is positivity in terms of price for the altcoin market caps is for the altcoins as well. And you can see the number of wicks that we have, which has literally absorbed price very strongly. In terms of clean classical charting technical levels, we still have yet to attain this 192 target for the break of this very clean base that price did end up breaking early July. So we are yet to attain this technical target, and what I would say is that this move that we are projecting, it's another 30% up from here, and I would say that essentially would be the move which takes BTC close to 14,000. So this is in line with the technical target. Just like the total market cap, we catch this technical target and flip either this 154 or 145 level into support for the next big move up. So this is what we are looking for in the altcoin market cap. This is the scribble I had drawn last week. You can see we are still within this strong consolidation zone. We are right above it. I'm just gonna hide these scribbles for a second. So we are right on top in this close to this resistance level. On a daily closing basis, it's 141.8. That is on trading view. So once price does end up closing above this, you can know that we are tending to move higher. But in case you have missed this, you could be looking for that retracement on the total market cap. It is a cleaner, much cleaner level where to be looking at the retracement. But once we do end up breaking above this, you can see that again we will open up a double bottom technical target, which takes us to much higher levels. So essentially for the altcoin market cap, this is the weekly level that we are looking at for price on this next move for BTC. It is still dependent on how alts react. For now, what has happened is that each time BTC is making an impulse, alt BTC is getting a bit of a correction, but as soon as BTC is moving sideways, alts are catching up. So it does seem like they want to at least go sideways while BTC moves up. So it is positive, even if you have a decent amount of alt exposure. Personally, for me, I mean, I had only chosen a few of the outperformers. Uh, if you on Discord, I have shared the alts which I am currently um, long. But if I do end up seeing strength on a few others, I may be looking to diversify some of my BTC and Ethereum exposure into more altcoins, because you do know they have more volatility, and if correlation remains positive while BTC is making a move, it is more profitable to be holding altcoins. So looking at Bitcoin against the dollar, and this is our BTC index, you can see on the weekly we have moved up on higher volume that we did have on the previous 2 weeks. It is not significantly high because essentially we haven't yet had a breakout, but has been higher in the previous week's consolidation volume. In terms of the close, this is quite a decent weekly close on BTC. Of course, on the weekly time frame, we do have this 11,500, 11,400, this big resistance zone, but essentially it is this 11,750. That's the big range POC for this range, along with the weekly level. That's the big level that we are looking at on a daily time frame. This was the level, this was the big resistance zone, which now price is looking to flip into support. So I would say this 11,100 is where price needs to find support, and for further continuation. And for downside, I think we don't want to see price moving below this quarterly level. I think that is not good for this, and it would entail a false breakout and a longer consolidation. But for now, this is quite positive. I mean, it was weekend volume slightly lower once we did move higher. So what you want to see is price holding this 11,150 level, which was previously tested as resistance. If we can flip it into support, it's also the VWAP of this anchored VWAP of this entire range that we had since the end of July. So you want to see this entire zone turning into support, and for price to get that further continuation. If we're looking at similar targets to the total market cap, then we would be looking at this 2018 yearly open level, which is a big level for price and for BTC, because you can see very well that we have had absolutely no weekly closes above this level all the way since early Jan 2018. That was the last time we had any kind of weekly closes above this. So what we are looking for is price to come above here and then find support at least at this weekly 11,700, 11,750 level. So still the same, anticipating this move up unless this quarterly level is lost again for price. So for altcoins against BTC, we are looking at this altcoin market cap dominance chart. This is something that we have been looking at before. So what I did mention is the seasonality aspect. So I think it is potentially something that could very much be in play. And if we are looking at it in terms of structure, I mean, it is that 100 days of alt season and then a slight distribution with another move down. That is potentially what is possible. What we're looking at is this major diagonal level that alts are currently trying to flip into support. This is something that has my eye, and I would say that if what we have is this clean double bottom right here, so if prices to break up from here and confirm this double bottom, we could be just taking it level to level. Essentially we do have uh, quite a large sample size for what altcoins do against BTC, but we can still take it level to level. We don't need to create any kind of a bias, but for now I would say that this 42 level is what is major resistance for odds against BTC, is 42.5, and this is on charts.cointrader. I mean, why I use this is because rather than TradingView, this has much cleaner historics. TradingView does not have very clean data going back all the way to 2013. So this is why I use this. Deducing the previous resistance from here, it was close to this 44-45 zone. That is where we got that reaction in September. We got that strong reaction for odds against BTC. But essentially, you have to understand that this is the entire altcoin market cap, right? And a lot of this, it signifies the larger players. So this has been holding up because Ethereum has been holding up against Bitcoin. Large proportion of the altcoin market cap is Ethereum and Ripple, and it's still the top 10 coins. So they have been holding up, but if you look at the mid caps and the small caps, you can see that they have already had quite a strong down move against Bitcoin. So if you look at a mid cap weighted index, you can check one on Subverto, and even on CryptoSeer I have shared. So you can see that those have taken much stronger hit than what some of the large caps have. So this is possibly why this chart is still looking the way it is. But what we could also expect is that potential sideways, which means that each time we do end up coming to support, alts could be outperforming BTC, and once we head towards resistance, BTC could make its impulse, and that all BTC inverse correlation while BTC makes an impulse. That is something that is possible. And once BTC does hit 14k, we do get another impulse for all BTC while that consolidation is going on. And eventually, once BTC moves above 14k to get really impulsive, all BTC could take another hit. So something like that is possible. For sample size, we have too little a sample size, to to project what comes later. In terms of a alt season and a BTC bull run, it is only 2017 that we have, because before that, altcoins themselves were pretty scarce and it was a very sparse market. So essentially we only have one previous one previous sample where BTC has been on a major bull run and altcoins have gone along with it. So I would say we have to take it a step at a time. It is pretty unique. We have to continuously monitor the correlation while BTC makes new highs or while BTC gets impulsive, and we have to make our decisions based on how altcoins are moving when that happens. When it comes to traditional markets, what we have as a concurrent theme is that we have increase in breadth, which means market participation from all kinds of sectors that have been lagging, over the last decade. We have also increase in advancing volume. What I have for you right now is basically volume advancing over the primary market total volume, and you can see above 80%, once, twice, thrice, 4 times over a period of 10 days. Essentially what this projects is that whatever up days we are having, we are getting some serious buying. That's what this chart in front of you is showing. So we're getting good volumes across the board on the securities that are advancing, we are getting strong market participation, and all of this suggests that there is very good potential for continuation, like we have been speaking about over the last few weeks in our weekly reviews. Here we're looking at the Russell 2000, and what we're looking at here as a statistic is the best 10-day rally since the initial move of the March lows. This is when we had a very strong 10-day rally in the Russell 2000. This is your small caps, and basically in all the backtests what we see since its inception in 1948, we have here like the 99th percentile, and what this essentially suggests is that there is good potential for forward performance. So if your small caps are ready to participate in the rallies, it is not bearish by any means. We can say when we have weak market breadth, only certain names are pulling the market, but here you can see, look at this outperformance over the last 10 days. The small caps have really moved very strongly. So what I would say is that this is a big change, and this is a big shift, and it is significant enough for us to take notice and for us to find the strongest sectors and find the big movers and just follow the money, guys. And also, coming back to what was happening and the previous review, what we were talking about, if we do end up getting a strong price action over the next 20 days, it would lean towards potential for the Republican president and the incumbent party to come back, regardless of how bad the the current polls are, what it's looking like. Because you should know that last time as well, Trump was not the favorite, and it was quite similar in terms of the ratios. So just keep that in mind, and essentially understand that if we do continue getting strong moves in the market, it is another statistic that I will quickly share with you now that I think about it, so that we can also keep half an eye on the presidential elections. So here we have it in statistics for you, the number of times that the stock market was right, and essentially what it shows us is that it has been right 20 out of 23 times, essentially, that each time the previous 3 months the market has moved up and has been positive. Before the elections, it has been the incumbent party that has won the elections. So this has happened 20 out of 23 times, so this is quite significant over the last 100 years, literally. So what I would say is that you need to keep this in mind. It is still 20 out of 23, it's not 100%, and even if it were 100%, there is no guarantees in the market and there's no guarantees in life. But this is the statistics that I was talking about, and potentially looking at a strong October with good breadth, good market participation, and a very negative outset for Trump again. So this is something that we need to be looking at, and something that we need to keep in mind. In terms of the sectors, since the 25th September lows, we have semiconductors, metal mining, and biotech as the strongest sectors in the space. Would like to tell you, transports are making new all-time highs as well, and that is just absolutely not bullish in any sense, not bearish, sorry, in any sense of the word for the markets. In fact, it is the exact opposite. It is extremely bullish that transports are making an all-time high. In terms of semiconductors, this is semis against the SPY, and what you can see is a very large base This is from 2000 till about 29 is a 19-year-old base which price had broken up and tested as support in March 2020, and now we have built the impulse from that. So technically very strong, a very bullish uptrend. A lot of semi stocks doing really well. Usual leaders like Nvidia, AMD, they in fact are outperforming the market currently. So these three sectors that I'm telling you about, mm, since the September bottom, they have been performing pretty well. Biotech, semis, and metal miners. Metals are doing well, so metal miners are doing well also, largely to do with the dollar. There is speculation that about the stimulus, but what the market has decided is that even post the election, there is going to be a big stimulus that will be incoming if it does not happen now. So essentially, it's possible that the market is using its momentum and pricing that in. But quite a clean flag on the semis against the SPY, which we retested around the 21st and 22nd of September. And we have made another impulse out of there. So here we're looking at a very, very significant base. You can see that this started getting built early 2000, late 2007, and we have essentially a 13-year-old base which has currently broken out on a monthly time frame. This is very significant. ITB, this is the US home construction ETF, and this is again signifying that there is a very different complexion to the markets currently than what has been before, and there is very good potential for large amount of participation taking place in the progress of the current market. So again, very significant, a very large base, and another very telling sign that things are not as bearish as they seem, you know. And what if you looked at the longer time frame macro special, there is still potential that, you know, the fundamentals and the numbers, they need to catch up to price. So we could have parts of 2021 that are sideways while the numbers catch up to price, but eventually this is something that is showing good potential for continuation over the next 5 to 7 years. Quick look at the dollar. So this is the 100 EMA, and also which had big confluence with this VWAP and big monthly level I'd spoken about in the last review. We got a strong rejection from there. On the daily, currently you can see we are below the monthly pivot and the weekly pivot. In terms of weekly closes, we have a weekly close below the quarterly level. So this does not bode well, and this is an encouraging sign for all of us who are bulls on metals, commodities, and essentially even the stock market. So risk on assets have very strong inverse correlation to this chart. In case you're not already in yet, this is the kind of consolidation and breakdown for the low that made the high. You know, if we start making this break this low and consolidating below it, we can look for this move to the quarterly level, which gives us our move in the crypto markets and in the metal markets. Last week we looked at copper. Our plan worked out very well, and currently, I mean, essentially, possibly you don't need to look at commodities every day. Spoken about a new commodity every week the last 2 or 3 weeks. You can just have a quick look at the reviews at the ones that we are looking at, but they're moving very well inverse correlation to this, and looks like things are in plan. But what we need is for the dollar to start consolidating here below this level right here and move towards the quarterly level. In terms of the weekly close, the suggestion is again to the downside, while we are below both the monthly and the weekly pivots. If you found this video helpful, please give it a thumbs up and go ahead and share it with someone else. And if you have any questions about what we covered today, please leave them in the comments and I will be sure to get back to you or answer them in my next video. For more trading content and education, go ahead and click on the video on your right. Thanks for watching, guys, and cheers!